We're about 2 minutes away from the end of the trading day. Scarlet Fu and Alix Steel with you, counting you down to the closing bell. And we're bringing in our colleagues from radio right now, Massar and Tim Stenovec, saying hello to everyone across Bloomberg Television, Bloomberg Radio, and our YouTube audiences. Soft landing hopes spring eternal, Carol.
Well said, well said. You know, I keep looking and I'm thinking, what? Record on the S&P, could be a record on the NASDAQ 100. We have 2 tech IPOs, one yesterday. It's continuing to gain today. Of course, the Reddit IPO up almost 50% as we speak. I'm like, wait, is this 1999? Like, what time is this? Like, it just feels like we were just talking with a guest who kind of was like throwing water on the fire and saying, wait, slow down a little bit. It takes a while for all that Fed interest rate increases to kind of kick in, and we're getting to that environment.
That was Cheryl Smith. She's over at Trillium Asset Management. She's an economist and portfolio manager, Alex, and she is a little concerned right now. She says we're 4 to 6 months away from a recession. She's starting to see softness when it comes to many of the state employee figures. Credit card delinquencies are, are going up. And she says it's always like this just before there's a recession. And it's a really contrarian view that we're hearing right now from her, because it goes against everything that we've heard from so many other participants and market watchers.
Which it just feels like then we're just in a bifurcated sort of world, right? That if you have your money invested in money market accounts, like Scarlett and I were just talking about, you're making a nice return. Maybe you're doing okay. If you're in the equity market, you're doing okay. But I think Larry Summers and had a paper out with some colleagues that talked about the fact if you factor in debt in addition to mortgage payments and debt payments, you're actually looking at a lot more stress on the market and individuals than would be implied by just straight up inflationary numbers. All right, there are the closing bells. I think we're at a record. I'm going to try and do this real fast, but it seems like we're at a record for the S&P, right? And we're at a record for the equal weighted index as well. The NASDAQ 100 at a record. Here we go, guys, though, record after record.
Yeah, exactly, right? I mean, it just makes you look. I mean, we're looking at, what, about a 27% jump in the S&P 500 since that late October level. So we have seen quite a run up. S&P 500, folks, let me just dig a little bit deeper. We've got 379 names to the upside, so a lot of names gaining in today's session. 123 to the downside, Scarlett, and 1 unchanged.
And a very broad advance as well. You look at the IMAP, which, of course, breaks down the S&P 500 into 11 sectors. Industrials, financials, energy, those are your best performers, but you've got 9 out of 11 groups in the green. The laggards here are utilities and communication services, but industrials take the lead here, up almost 1% on the day.
All right, guys, let me get to some of the individual gainers, if I may. Micron on that list, closing at a record high today, up 14% here. Largest U.S. maker of computer memory chips, soaring today. We know we broke it down yesterday after the close when it gave its quarterly update and outlook. It gave a surprisingly strong revenue forecast for the current quarter, buoyed by demand for artificial intelligence hardware. So this one, definitely an outperformer.
You called it, Carol. You called it yesterday.
Do you know, I actually, it was on my list.
I
put it on there.
She did her gainers before the market even opened this morning. She told me. That's a little secret to Carol Massar.
But, I mean, it worked.
She was
It worked. All right. So Reddit is on my gainer list today. Of course, we've all been talking about it. IPO today at its highs, up as much as 70%, finishing the day with about a 48% gain, $50.44 a share. Remember, it IPO'd, at 34 a share, which was the high end of the range, and popping in a big way today. I wanted to check just real quickly what the market valuation, market cap, over $8 billion, according to the Bloomberg terminal. And then let's go to the IPO yesterday, talking about Astera Labs. This one, which gained over 70% yesterday, soaring again in today's session, up about 3%. Actually, it was up much more earlier in the day. So, yeah, a little bit of a pop, but nonetheless, gaining again for a second day. Semiconductor connectivity company geared to enabling what is called mainstreaming of AI and machine learning in the cloud. So nonetheless, that one continuing to gain ground in its second day of trading as a publicly held company.
Okay, so Carol does the gainers before the market even opens.
I had the easy.
I'm at 355 frantically finding the companies that actually moved lower. There were a few actually prominent ones. We got to start with Apple because shares of the company fell more than 4%. It's actually its biggest drop going all the way back to August. Raised about $114 billion in market cap today. Year to date, Apple shares are down 11%. Regulators on both sides of the Atlantic are taking a look at Apple right now, and that's got investors worried. Here in the U.S., the Justice Department and 16 attorneys general are suing Apple for violating antitrust laws. We spoke to Jen Rhee over at Bloomberg Intelligence, who said this could be a years-long process. In Europe, the company is said to be facing probes about whether it's complying with the Digital Markets Act. So some regulatory concerns on both sides of the Atlantic for Apple. Shares down 4.13% today. And now check out what Accenture said about IT spend this year that had shares moving lower. Shares fell 9.3%. It fell as much as 10%, its biggest intraday drop in more than a decade. You have to go back to June of 2013 to find that. Accenture cut the top end of its adjusted earnings per share guidance for the full year. It missed the average analyst estimates, and the company, which of course does consulting services for IT and tech, warned that it's seen financial services customers pull back their spending when it comes to software. And then Chewy, this company reported after the bell yesterday, shares fell earlier in the session and ended up finishing down more than 10% on the day. It did post net sales guidance for the first quarter that didn't meet consensus estimates. The online pet retailer beat consensus on fourth quarter net sales and adjusted EBITDA. Analysts, though, flagged a sequential decline in active customers during that period. Citi did say the results were good, but not great. Nonetheless,
they need more 20% off coupons.
You think so?
That's the solution.
Their margins must love that.
Their customers love that.
Yeah, that's fair.
That doesn't always work out for the companies, right?
Yeah.
With those discounts.
Yeah. See, you could have done that yesterday, Tim. Maybe you're just, you're not thinking ahead.
I couldn't have done Apple.
That's true. That's true.
Okay,
All right.
to be fair.
I'm taking a look at the bond market here, guys. So you're looking at more action in the front end. You're having a little bit of a sell-off there. You have yields up by about 4 basis points, reversing some of the gains that we saw yesterday in the market. Also, just on the macro, bent here, the BOE laying the groundwork for a cut. No one wanted a hike this time round. The S&B wound up cutting rates. So just all across, it feels like, S&B beat the Fed to it, right? So in some ways, it's no surprise that you see higher yields on the front end.
All right, folks, a few more earnings still crossing as we are almost really done with earnings season, but Lululemon crossing. Let's go to the numbers. Fourth quarter EPS, $5.29 a share. Also looking at fourth quarter net revenue of $3.21 billion. Slight beat, guys. The estimate is $3.19 billion. More importantly, let's go to the outlook. First quarter EPS of $2.35 to $2.40. Looking for some comparison here. And also says it sees first quarter net revenue of $2.18 billion to $2.2 billion. The estimate on the street was $2.26 billion. No surprise to see the stock tanking in the aftermarket. Right now down about 7% here. The stock is down 6%, though, in 2024. But again, a drop of about 9% in the after hours.
Yeah, the first quarter revenue is what is coming in light. Analysts were looking for $2.26 billion for the first quarter revenue. Lululemon sees it at most at $2.2 billion. And the first quarter EPS of $2.35 to $2.40. Analysts were looking for $2.55. Are there discounts taking place at Lululemon? Because I go in there a lot and there are not.
I never do discounts.
No, I know.
That's why
I
I
never
don't
see
shop
anything on
there.
the sales rack.
Yeah.
So,
I'm not seeing a lot in terms of actual color coming from the CEO or CFO in the press release. We'll have to wait to the call to get more. I did see from Megan Frank, the chief financial officer, said that looking ahead, they're going to stay focused on driving the business forward for the near and long term while operating with agility and discipline. She did say that we're still early in our growth strategy and excited for what the future holds.
Yeah, I agree with you. I was reading through the press release also. It just seemed very vague on that front. One more headline here. Lululemon sees their full year guide does not see share buybacks. And remember, it was that net revenue for the first quarter on the high end that kind of fell short of estimates on that.
Yeah, Calvin McDonald, the chief executive officer in the press release, too. I feel like this is interesting when they're talking about kind of opportunities. We are focused on significant opportunities ahead for Lululemon as we navigate the dynamic retail environment. And I feel like when somebody says dynamic retail environment, I'm like, how do you read that? Is it difficult? Is it good for you? Is it not?
It has to be volatile. It's volatile.
Changing.
It's changing, and we're not sure where we fit into that change.
Exactly how I read it.
They do have a history of these successful activations in store, right? The idea of offering something in a store that you can't get by ordering online, like yoga classes and other fitness things. And I'm wondering what the appetite is for that right now.
Maybe we all have enough yoga pants. All I know is I agree with you. They're never on sale, or there's a little sale rack, and it's not inexpensive, right? It's not inexpensive.
Yeah, $100 yoga pants, everyone.
No thanks for something I sweat in. Not happening.
All right, guys, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We will see you again for the Friday edition of Beyond the Bell. Yahoo! We'll see you same time, same place tomorrow.